Hello and welcome to Stock Picks Made Easy. Today's date is the 19th of June 2017 and this is our weekly forecast for where we see the US market heading over the next 7 days. And as a special bonus, we're also going to do an insight to actually where we see the market heading for the next 12 months based on two scenarios. My name is Michael Lee and I'm the co-founder of Stock Picks Made Easy alongside with Doug Capehart, where we've designed a system or educational service for our members to acquire the tools to create financial freedom, also creating residual income, taking low risks, using this share market as a vehicle, and also as we give our members, we're going to do webinars based on other investment vehicles such as the property market, tax liens, tax deeds, business structure, as being I'm also a business coach and also investment strategist. So we're going to share our knowledge with our members and also help them build their financial freedom. We believe it's everyone's right to be able to have financial freedom, and for as little as $1 a day, you can make that possible with our education. So please visit stockpicksmadeeasy.info and find out more information, and jump on board and trial it for 14 days for free. And then if you like the trades that we're taking or the information provided, please become a member. Again, it's $29.95 US dollars per month, no contract, and also cancel any time. So we want to make it affordable and as easy as possible for people to come on board and generate this information. So here's a look at this week's trades that we're seeing. We're also going to give you a bonus. We're going to show you the 5 trades that we've given to our members, and again encourage you to jump onto our website, take advantage of the 14-day free trial, and then you can click on the trades which you'll see that we've identified as potentially a buy signal and also sell signals for this week. Here's a look at the S&P 500, which is the US top 500 shares. Nothing has really changed from what we've seen last week. It's pretty much gone in line with what we mentioned. We seen what we could have here. I grabbed the pen. So if you can see, this was what we called last week, just for the market to come back and just pretty much go sideways. It didn't break the 2,400 level and it didn't go beyond 2,448. This week we're seeing a similar kind of thing. It's going to go back up and test at 2,450. If it breaks through that level, it's going to continue higher through the month of July. But the scenario we like better for the end of this week, we're seeing strength for Monday and Tuesday, and then we're seeing weakness come in Wednesday, Thursday and Friday. Now, people that are new to also trading and also what we call Fibonacci cycles, there's a cycle and study we've done which is a Benner Fibonacci cycle, which has accurately predicted highs and lows in the market with an accuracy of 6 months either side. Now the Benner Fibonacci cycle, which you can jump on onto Google Images, you can have a look at the chart there to see what it's calling, but it's calling the next high the year 2018. So if you take 6 months either side of calling the high at 2018, we're expecting a potential high in the market June 2017, as early as June 2017, or as late as June 2018, right? So we're going to show you those two likely scenarios using cycle lows from the year 2002 or using the cycle low of 2009. And what we do is we see different outcomes. Before we bring up those two charts, we just want to mention this week we're just seeing a little bit of strength in the market Monday, Tuesday, and then we're going to see a bit of a sell-off. Really go nowhere for the week. It's just going to go sideways and potentially just finish off probably about 10-15 points lower. Maybe it could be as low as 2,400, but we're not seeing a lot of movement at this stage. That's based on the research for this week. Next week is a different outcome. What we have is what we've noticed every 3 months, which is quarterly returns for companies, and again going back into the business consulting work I do, companies want to lock in profit. Companies want to show that they're earning an income for their members. So what they do is any profits they've gained over the quarter, they'll make sure that they sell the stock or buy the stock back, lock in their profits, and then when they do their quarterly returns to the stockholders or the shareholders, they're showing that the company's making money. So it's a certain way of manipulating the outcome. Once those stocks are bought or sold, the first week of July or the following month, they then start buying again. And this is a pattern that I've seen consistently work probably 9 times out of 10. Again, not a financial planner or a consultant when it comes to financial advice. We're educators that share our wisdom or knowledge of cycle work, and basically predicting or forecasting cycles based on historical events previously that occurred. Okay, so here is a look at the outcome using 2009 as a historical low based on the cycle work. Now we look at cycle works that gives us cycles between 9 months, 9 days, 35 weeks. 9 years is a fairly significant, between 9 and 11 years is a very significant highs and lows in the markets. So if we take this overlap of where our cycles work using our software or using the software that we use, it's indicating that we are near the stock market high. So what we anticipate for the rest of this, the next 2 months, is a market to finish low in June, go up during July, pull back through August. So really it's not going much, just up and down sideways for a period of time, and then we're going to see August or end of July start coming back down, move sideways through the month of September, as you can see here, and then October, which traditionally September the 5th is a high in the markets. This outcome of this computer program is showing that it's just going to be going sideways through this period, hit a high around end of October, and then it's going to see it going down through the end of November, and then a Christmas rally for the last 3-4 weeks of the year. This is the outcome, and then it's calling that that's the high for the market. Now let's look at the second scenario. Okay, a little bit different, right? So here we go, a very similar pattern where we're going sideways, but instead of going sideways to down through the months of July and August, we're seeing this vertical rise from about the first week of August or late July, and then we're seeing a really strong rally up until the end of December, bringing us to the end of 2017, taking us to new all-time highs to a target of 2,700, which is around a 15% increase from now until December. Now the indications we've got, if it breaks 2,500, it's likely it's going to get that extra 200-point rise before we hit the high in the market. And so then what it also does, if you have using Benner Fibonacci cycle as an indicator, we've got this 6-month window we're saying, which is potentially here's a high here around June 2018 and not going above the high of 2,700. So if that's the case, we are seeing that next year is going to be quite volatile up and down, but have a range of about 150 points, which is not moving no more than between 8 points or 8% throughout the year, and then right at the end of the year, where we get into the seasonal high of around September, that's a high in the market, and from there we're expecting the market to pull back to these levels, as shown previously around, I think it's 1,570 points. Right, so if that's what we're using the Fibonacci retracement levels, which is 61.8% retracement. Again, you don't need to worry about this as members. You basically just see the information, provide it based on our trading journal, and then you can make that decision whether it will suit your financial situation. All it's doing is giving an insight of where the market's heading based on historical events. So we have the two scenarios that we believe, but we know that 2018, late 2018, early 2019, we are going to see a lot of volatility. And also we've got a cycle reinforcement where we had a 100 years ago, 1919 to 1921, was a recession that the market fell back about 50%. So again, it's just research and study that we do. As mentioned at the beginning of the video, we did say that we're going to give you a look at our members site to show you the bonuses, to have a look at the 5 trades that we have for this week. These are the 5 trades that we've got for our members based on the cycles and the studies work. Again, if you want to become a member, you can jump on board. 14-day free trial. All you do is jump on the website stockpicksmadeeasy.net, go to get started, or you can go to www.stockpicksmadeeasy.info, and then you can follow the prompts there to take you to the website to jump on board and be a member for 14 days trial. No cost involved, just to get started, and you get access to these same trades. What you can see, we've got the 5 trades. What we do is we put down the date that we believe that is best to do the entry based on our analysis. And so we've got here is a Celgene, or the trading symbol is CELG. We've got an entry price here of $120.50. We have a buy signal that we're indicating that we're seeing strength in the stock over the next 10 days. And then we also, the target price is 135, which is what we have our target price zone. And then we have a stop loss area, which is $114. So if you want to see how the charts look when you become a member, just click on the click here for chart, and that brings you up the chart based on what we're seeing in the cycles. So again, as we mentioned, here's our target zone, the reason, that's a level of previous memory, and then the level here. So again, it's just an easy site to follow. We want to make it as easy as possible. And then you just go back and click on all of the links here to have a look. Look, again, look, also feel free to send through some questions, or if you like what we said, say yes, or is there any information you didn't like, please let us know. We get more value out of those that share the information they want to find out more about, or what they didn't like about the presentation. So thanks for watching this week. Look forward to joining you again next week to share our view and see where the market's headed, and have a look at our results based on our forecast. So have a great week. Thanks for watching. Bye for now, and look forward to talking to you again next week.